Thank you for joining iMeet. When you hear the tone, you will be the 24th person to join the meeting. Is now being recorded.
Hey everybody, good afternoon. This is David Blake with Tuesday Tech Talk, and today we're going to quickly review the last couple of days, try to figure out what's going on with the market. As I was writing this morning, we were up about 70 points, and the market headed south pretty quickly. But we'll talk a little bit about what's going on with this, and also today we're going to take a look at some ideas that should be able to make you some money, whether long or short, and let's go ahead and get started, and we'll first of all take a look at like say last week and see what's going on here. As we open up right here, the market's down about 149 points back to where we were about 3 or 4 weeks ago. But what we're going to talk about briefly here is one of the things we talked about quite a bit, and that's the Dow Jones Transportation Index, which finally broke below 9,000 today. And I think the selling kind of picked up after it did that. But just a review of last week in the market letter. We finally had to switch to bullish. Maybe our timing wasn't exactly perfect. We'll find out later on today. But we flipped over to bullish on Friday when the Dow was at 20,914. If we went back to the bottom for that last cycle was probably November 7th. We're not real concerned about a 150-point drop-off. We've got 114 days without a 1% drop in the S&P 500, and we're not off 1% even today. We're still off only about 0.75%. But right now the CTI is at 13. Every cycle is in bullish ground. The momentum slipped, actually improved last week to a neutral -2. That means that since the November lows, the Dow Jones is outperforming most of the other indexes, including the S&P 500, the NYSE, and the utilities. Sentiment is a neutral +1. We did have some deterioration in the strength indexes last week, which kind of left us with our mixed outlook for the market. But again, we'll see what goes on here later on. Internal breadth was much better last week. We had a big pickup in the advanced decline line, and we also had about 50-50 with the sectors. They were led by healthcare and financials. Oh no, I'm sorry. Healthcare and financials actually weighed on the market a little bit last week. And we'll talk a little bit about the financials and what's going on with them right now also. But what we liked last week was a pickup in the small cap index. We saw we had a small correction in the transports in the Russell 2000. Where they were down anywhere from 4.5% to 5.5% over the last couple of weeks. The other markets held up very well, and a lot of that was because the retail client has been coming in with this passive ETF investing. They've been buying the SPY, the DIA, and the QQQ, which held the big three indexes up. But we did see a little bit of a rotation and a correction in some of the smaller indexes. We also had the Russell 2000 come back above the 50-day moving average, which is the plus. Let me see what today. Some of this stuff I'm going to have to just whip out real quick because I'm not sure how much we went down. Russell broke down below the 50-day again today. In fact, but the 100-day doesn't come into effect until we get down to the let's see here, until we get down to around 1340. So we still have a little ways to go for that. We're at 1357 right now, off about almost 2% on the Russell. The strongest sectors last week, or the strongest industries, were toys and semis, software and processing. That was mainly due to Oracle's big earnings beat, and also internet retail. The weakest were retailers, drug-based, coal, food retailers, and oil field drilling. Here's the Dow Jones Transportation Index. It's the first chart we're going to look at. Then we'll move on to these trading ideas that a lot of people want to ask me about. Okay, if you look down here, we were forming this little bit of a triangle. 20,800 was the support here. You can actually go down to about 780. We broke below that a little bit earlier today. We were at 20,750, I believe, somewhere around there, down about 150, 160. So we did break below this. If we can come back above that, okay. If we come back above this area, let me grab my pointer here. Okay, this was the line I was talking about. We broke down below this today. We actually broke above it earlier today, but right now it looks like we may get back into the middle of this thing pretty soon this afternoon. We're only down about 134 right now. A little bit of, this isn't really negative divergence. It was just a little bit of a correction. The stochastics show that we were no longer overbought. Didn't quite get oversold, but this has room to go a little bit lower. It'll probably get oversold midday today and maybe turn up at that point. And the MACD was also negative, but we were seeing some improvement over here last Friday. It looks like it's turning now. These are live indicators on this. Now here's the NYSE advanced decline line. This was very concerning to me, and I thought if we broke down to about below this area right here, that we'd probably stay bearish. But we got a nice bounce in this over the last week. Picked up this over here had retraced almost all of the units we had gained in February, and last week we gained about almost 3,000 units back, and that's fairly solid now. With the NASDAQ composite, this is another one we're kind of joining here in this little trading range that we're getting to. We actually made a new high early this morning intraday. We've broken down from that now, and we are at 58.47. The pivot point is 57.40, so we still have a ways to go before we're even near the pivot point. 58.60 was the bottom line here, a little bit of a short trend line with that, but we broke below that. We'll see. 57.70 or so would be 57.70 would come in right about the pivot line and the 50-day moving average if we would get a little bit more selling. We were getting the negative divergence over here on the 14-day RSI, which was troubling to us. But as you can see on the NASDAQ, we did actually have some confirmation of this little rise up here from the MACD. We were moving up, and I thought we'd have gone positive today, but we didn't. So we'll maybe possibly look for a test down here to this pivot point on the NASDAQ around the 50-day. That should represent a pretty good buying opportunity. Okay, here's one other thing over here. Sometimes when I talk about, I use the 30-day stochastic rather than the 14.3. It gives a pretty good signal when the 30-day crosses below 50. You can see back here before the election where it came up in here, and the market took a pretty good tumble after it broke through that. It got you back in here. Most of these things are just V-shaped recoveries anymore. So it got you out over there. You avoided this, and you came back in over here as we started a new leg up. We'll watch to see what the 30-day does today, but I don't expect to see it break through 50 on this type of a move. I think we'll be fine on that. Here's the NASDAQ advanced decline line. Again, we had a bounce off of this area. And one thing that's, when we look at some of these indicators, you can draw in support and resistance levels on indicators also. In this case, when it was coming down here, I told you we were probably going to stay bearish, especially if this thing breaks below this. It didn't. It bounced off of it. When we may come down here and get another little test here the next day or so. If it does break that, it would be another red flag that would come up. But I suspect it will come down here around the 50-day, and then we'll move up on a little bit higher off of that. Okay, and here's what I think caused a little bit more of the selling today to pick up. Here's this thing going into the transports, going in this trading range, bouncing off this 9,000 area back in here. Today we came down and we just broke below that. We're back to 9,000 as we speak. So maybe we'll see if we can crawl back above this 100-day moving average. A close above 90, I'd say 90.75 or so would be pretty good for the general market. This negative divergence was troubling all the way down. The MACD was also showing negative divergence. We did get finally to the point where we were oversold, so this thing gets down today, probably down here around 5 or 10. We're going to watch it. But the thing with the 30-day, when it's above 80, it means you're in a strong trend. When it goes below 20, you're in a pretty good trend the downside too. So we may not get the bounce back to new highs like over the next couple of days. This may be a kind of a sideways grinding area down in this thing with all the major averages, and it might be a good time just to wait to see if we catch support at the 50-day or the 100 days averages on the big three. And if we do, if we bounce off of that in like 2 or 3 or 4 days, it might be a good buying opportunity, and then we can start to work our way higher. But this has been troubling all along, and like I say, when we broke that 9,000 today, I think that's where the selling really started to kick in. In fact, every component on the Dow Jones Transportation was negative earlier today. All right, here's the Russell 2000 with its negative divergence that we talked about, and while this was going on, we got that little bit of a 4.5%, 5% correction, bounced off of this support zone down here around 1353, came back up above the pivot line and the 50-day. Could not hold it with this little downward trend line. We'll see if we can hold this support down here around 1353. We're at 1358 right now, so anything above that would be good for the market. Today we'll probably get this breaking below 50. We'll have to watch that on the Russell too. But again, we had a pretty good correction in the small caps and the transports already. Almost about a 5%. So let's just to see if this thing can kind of hold some of the lows from back here before we go bailing back in. Okay, what I wanted to talk today, we always talk a little about different indexes. I had some questions coming in about saying with Market Edge going, where can I, find some screens that I can go to in the morning, get myself maybe 5, 6, 7, or 8 stocks to look at on the charts that should give us a pop. And basically, what we're talking about when we're looking for day trading or for that type of investing, what we call that investing with relative strength or momentum trading. So what I want to do is give you about 4 or 5 steps today. It'll take you about 10 minutes in the morning to find some of these ideas, and hopefully I can make us enough money to pay for Market Edge for the year by doing this. But what I want to do is kind of look at this in the morning as 4 different steps that I want to take. Okay, the first step I want to do is I want to eliminate 90% of the stocks that look weak or not breaking out to new highs, that type of thing. The second thing I want to do, I want to find the segments or the sectors of the market that are leading the regular market or outperforming. Number 3, let's find 2 or 3 industries in that sector that are leading the broader market. And number 4, let's try to find 2 or 3 stocks in that industry. All right, as of this morning, I was actually a little bit surprised on this, but we only have 3 sectors out of the 11 that I follow that are actually right now outperforming the market. We have technology at 1.04, and if you go to second opinion and just put in these symbols, you can find this every day to see which ones are going through, with the different sectors, XLY, XLU, XLI for the industrials, XLB for materials, XLE for energy, that type of thing. They're all underperforming right now. But we have technology is outperforming the S&P 500 by 4%. Healthcare is outperforming by 1%. Consumer staples is performing by 1%. And consumer discretionary yesterday was when I started to put this together, but yesterday was a little bit weak. So it's only a market performer right now. So what I want to try to do is I want to narrow all my searches right now to either technology or healthcare. Okay, I've done a little bit of work beforehand, so let's pull this before today's little bit of a pullback. This is the XLK technology. We can look at the charts. I don't see a lot of negative divergence in here. Everything looks strong. We're trading up above 80 on the 30-day. As we try to make new highs, the 14-day RSI is confirming the new highs. It is troublesome with here, I drew in this channel that's been working up, and we were over the channel. You actually had a little bit of an overthrow where you went above that this morning up to this 54 area, and now you've pulled back. Maybe we come back down to the pivot line back here around 51.50. That would also coincide with the 50-day moving average. So if things pick up a little bit, this would represent a good buying opportunity. That's only about a month and a half ago where we were just at those levels anyway. So technology chart looks strong at this point. I have no problems with buying that. Here's the healthcare sector. Again, we came over here, made a little bit of a new high. Just a little bit of a pullback. I wouldn't call this negative divergence. We are below the 80 level on the 30-day stochastic, but not by much. This will probably pull back a little bit today. And the MACD actually gave a little bit of a sell on this thing. We'll see how this thing wraps up. But if we come back down here to the pivot, which is just above the 50-day moving average, this would represent a great buy, I think, going forward on that. So we want to concentrate our trading ideas today on healthcare and technology. All right. So what I'm going to do, the first thing after I've identified what sectors I want to go into, I'm going to go over to the Advanced Tools module. I'm not going to do what I usually do. I just pull up the industries, go to find the strongest stock over there. We're going to take a few different steps today. But if you're not a platinum member, I think that's probably one of the things for an extra $10, I think it is. You get this Advanced Tools, you get industry group analysis, and also the point and figure breakouts. But after I find the sectors, I go over here, I click on industry group analysis, and what I want to do is I want to find what industries are outperforming the broader market. So we're looking for industries that are in either healthcare or we want to find something that's in technology. All right, the first thing we come down over here, we see semiconductors and related. Okay, we want to look in that group. Toys or consumer discretionary. Okay, we can look at that, see if we come up with anything, but it's actually a market performer. We have software and processing, which is the third best sector. So I want to look for stocks in that to trade today. Internet retail, that's discretionary. I'm so on that. Come on down here. We have medical supplies outperforming the S&P by 7%. A little bit lower, we have medical biotech, and we're outperforming the S&P 500 by 5% on those on that industry. So that's the four industries that I want to look at today for trading ideas. Okay, the next thing we come over here, I'm going to show you two different places that you can do a screen to find some trading ideas on this. And the first one we're going to is on the screening tools. The first one I have here is Pick 6. Okay, I can eliminate about 90% of the market by just the two or three steps that we've already done. But what I want to try to do on the Pick 6, after I do this, I want to show you how to do the report output, so you'll have a couple different things in your report output list. But I want to look for the 10-day moving average up. I want the 21-day moving average up. And after that, I want the 50-day relative strength to be bullish. We'll keep this. We're going to get a lot of stocks, but we're only looking at the top couple on that thing anyway. Now, I'm also normally you could go up here, you could eliminate stocks under $5, that type of thing. I don't mind looking at $7 or $8 stocks. I don't like $5 or under. But anyway, once you put these screens in, click Run the Filter. You're going to get a list of stocks that will come up here. Now, when my report output, which you can go into the Help Contact Us button on the Market Edge site, I want to get the 5 and 10-day percent change. I want the up-down slope, so I know whether it's under accumulation or not. And then I want the power rating, and I want the relative strength and the opinion. All right, this will enable me to take this list of stocks and then sort it by either relative strength or the power rating. Okay, now this one here I sorted by power rating, because a lot of times I'm just looking for just a brand new idea. I want to list them by power rating. Usually anything over 100 I may shake off, because you're going to get a move. The stock's probably already moved 25%. So if you have this 5 and 10% change over here, I can eliminate any stock that's up 15 or 20% over the last 5 or 10 days. The reason I do that is they've already had a pop, whether it was from an earnings beat, rumors they were getting bought out, something like that. But then I have this list over here of the relative strength. These are the stocks that are outperforming the market. How do you know what industries the displayed ones are in? We'll go over that in just a second. Okay, so I'm going to go over here. I'm going to look at this list of stocks by the power rating, and we'll find like Medlink, NLNK. This is Medlink Genetics. If I click on this and go to the stocks or the second opinion, under second opinion we have company profile, and that'll tell you what the company is in. This new link genetics is a biotech, so I want to keep that in mind. Relative strength 1.97. It's outperformed 5 to 10 day percent changes, 2 to 5%, not bad. 99% is a high power rating, but we'll take a look at it. Okay, then we have La Jolla Pharmaceutical, 15% move over the last 10 days. That's right on my border, that 15%, so we'll probably take a look at that. Here was the Longs, UltraShare, NASDAQ, that's okay. Kemet Corporation, when I looked at that earlier, it was electrical equipment technology. It's not a semiconductor or a software, but we might take a look at that. And you can come on down here, you have Kite Pharmaceuticals and a couple other ones in there. But again, you want to eliminate the ones that have had the big moves previously. And you can go on down here. I really didn't see any semiconductors in here, which was kind of surprising. But as we go down, you can find some of those. I'm also going to eliminate any stock where the up-down slope is down, which means people are already taking some profits in that. All right, using that Pick 6 filter, and I'm just going to pull these kind of at random. We looked at that NLNK, which is a biotech, LJPC, biotech, KEM, electrical equipment. I wish it was a semi, but it's not. We had FMI, which is not a niotech, it's a biotech. And then we had OLED, which is lighting displays, electrical equipment. So these are 5 ideas from the Pick 6 filter that I may want to look at with the charts. Okay, now the other place that I want to go, we can go to trading ideas, click on stock analysis. Okay, then we're going to go to upgrades once that drop down on stock analysis. And then I want to sort this out by this will come up. Then I'm going to sort this again by the power rating. Now these are stocks, and the reason I go to the Pick 6 also, because that'll give me stocks that may have been upgraded over the last week or so. This one here, if I'm just looking for today for stuff that has been upgraded today, this is why I go to the stock analysis. This will shorten my list a little bit. These are the stocks that were upgraded to a long. These are the stocks that were upgraded to a neutral. I'm going to check out both of them by the relative strength and power rating. In this case, what we found, again, we're looking for tech and healthcare. We'll come up with the different stocks let's see, 2 of them on here I liked were, here's Varian Medical Systems. Okay, medical devices and biotechs look good. This thing's only been up 3 and 6% over the last 10 days. Everything looks bullish on it. This is one we'll take a look at. And the other one was ENZ, which is right above it. That's a biotech. I didn't see any semiconductors being upgraded today in either place. And then every once in a while, the neutrals, you'll still find a stock that's above 1 with the on the relative strength. Those are worth a look. That means they're moving. They're going to be upgraded probably within a day or two. So there's no problem looking at those. But anyway, so let's just for today, I would have looked at Varian Medical and Enzo Biochemicals. All right, here we go. Here's today's upgrade sorted by relative strength. MEI was electrical equipment. KRA was chemicals. I'm probably going to pass on that just because it's not what I want to be. SKX is in retail. It's a market performer. I could look at that chart today. ERI, consumer discretionary, also it's in gaming. I could take a look at that. But here's the VAR medical devices and ENZ software. So this gives me 5 or 6 stocks to take a look at. Now, what I've also done today was kind of give you when I track some of these things to follow what they're going to work out. I instead of just entering what yesterday's close was, I'll look at them as far as the opening price goes into. Okay, here is this New Link Genetics. Had a hell of a run over here from 11 up to 2174. We're up here making new highs and things kind of going some back and forth. Pricing the 30-day is above 80, which I like. Today's opening price on this stock was $22.56. So it was sold off yesterday, opened up a little bit higher. And bear with me while I kind of go through these things so we can see what we would have done today. NLNK. Okay, it opened up at $22.56. It actually did hit a high today of early at the open 2263. Of course, we sold off here with the broader market. So this is going to be kind of a tough day to do this because most of these opened up, went higher, and reversed course with the broader market. But this would be one that you could take a look at. Also, I don't have it on here, but I want to have this above the 10-day and the 21-day moving average. Our smart chart is still in the process of getting fixed, so I can't show that on this thing. And I also want to make sure that the up-down slope is showing a nice upward trend on this thing, which I imagine it would be on this thing. So today, this would have been one I would have looked at. If I put the order in and it starts to go up, what I want to probably do is go back. I'm not going to let it trade below 3 days below if I'm looking at maybe a week-long trade. Otherwise, I might not. Another rule is never turn a winner into a loser. So maybe we might have had a little bit of a pop. But this went up on the opening day, so it may have worked out if the market had been flat. Here's this Foundation Medicine, FMI. We bought this. It opened up today at $32.50. Got as high as $32.95 today. So after we bought this thing for our little morning trade, it did go up 50 cents. It rolled over. We're at $32.15 right now. So again, we're not getting hurt by this thing by any means. We would have made the initial pop. It showed nice accumulation. This was a little bit bothersome to me on this, but the fact that the 30-day was moving over, we weren't overbought. I like that. So again, we were still above this low from 3 days ago. I thought you filled the gap on this from probably about 2 weeks ago, which is if it fills the gap and bounces, that's usually pretty bullish. So again, this would have given us an idea where we would have picked up on the opening trade. We might have made about 50 cents, and you were in the right sector and you were in the right industry. Here's this OLED. Okay, the OLED, the opening trade today was 85.65. It traded up to 86.45. So we came in here, we bought the opening trade on OLED in the right sector, kind of the right industry. We'd have picked up a buck on this trade. Wasn't overbought. We're still above the 30-day, which I like. I can't believe I didn't put the 10-day and the 21-day moving averages on this, but I'm sure it's above on those. 10 days probably right in the middle of that. You have some nice crossovers on this. This is probably a nice longer-term trade, as you're, especially if you break out to a new high and take out this little loop on that with the pullback. So that would have picked us up a dollar on that one. Okay, if we come over here now, the next one. This was this Varian Medical Systems, VAR. Okay, it opened up at 91.87. The high was 92.57 before we started to sell off, so we picked up 70 cents on this thing if you're looking for the little pop. This was breaking the new highs, breaking the new highs, breaking the new highs. Here's the ADX. One thing I want to is if you have the green above the positive above the negative, and this ADX signal line is still going up, that means the trend is strong. Once you see this start to roll over, like over here, you saw this thing going up, and you start to see it roll over. That usually tells you the trend is probably over. Good buys on this thing are when you see this thing below both of these, and you start to go up. We talked about this one time with the S&P 500 about a year or so ago. When you're looking to buy some of these things, if you see this ADX line turn up when it's below both of these, you're usually going to get a pretty good move on that thing. In this case, you'd have bought this thing as it was crossing the 100-day moving average, and if this thing started to pick up, this meant the trend is strong. The DMI positive kept moving up, and of course the stock did also. So this VAR was a heck of a trade. You still got another pop on that thing. Last one we're going to look at this morning for just for our quick trades was this ENZ. It opened up at 790. Today that was basically the bid, but we're still at 783. It is over here. So it didn't do anything. It still had this pop over here, but it's still it's not pulling back. This is kind of a low volume stock, but the fact that the thing's rolling over here and the biotechs are down over 2%, that's kind of bullish on that thing. So these two places are ideas where if you're looking for these shorter term trades on Market Edge, this is a place you can go to that I think would help you, just for the guys who are especially looking for something to pop. Now, I want to throw a few caveats in here. These stocks, when they run into the long, that maybe go in, they're upgraded into things like a 1.10 or something like this, or 1.12. Stocks that usually beat the market tend to continue to beat the market. And some of these stocks like that, maybe like this Variance Medical, if you're buying this thing, I'm not sure. You might get some sideways of consolidation in here, but a lot of these stocks that beat the market continue to beat the market, and they're going to be winners for quite a while. And sometimes, if you buy 1,000 shares, none of this one probably is $90 stock. But if you buy something that's a $15, $16, maybe $25 stock, if you buy 1,000 shares or 500 shares, maybe you hold on to 100 shares or two if you're in the right part of the market, or you can hold this thing out, or hold it long, or you don't have to shut these things out after a day or a week. And some of these ideas that I just gave you, what I do a lot of times is just track to see how they perform and close them out over a 1 week period. You're usually not getting the high, but you're not getting the low either, and you can pick up anywhere from 2 to about maybe 10%. So these are ideas that have worked in the past. I did this just for this meeting. Over the last 10 days, what I wanted to do was, okay, let's take a look at all the stocks that were upgraded to a long, where the relative strength was above say 1.02, 1.03. I have a list of here of the days that I entered them. Again, this open price was the first trade of the day. We had this ALB. I closed all these 1 week later. Some of these you could probably still hold on to. I think they'll do well. And we made 1%. Win. We opened up on the 9th, closed on 1 week later. We made 7.44. TNet made 4.5%. EXPE, we made 5%. We opened up on the 9th, closed on the 16th. IGT, this is a bad one. This is one of the things when you're going to buy especially on a really short-term trade, like a 1 day or two, you're rolling the dice if earnings are coming out that night. IGT was in that morning, that night. They released earnings and it went down 12%. So that was a loser. But here's a couple other ones. PLCE, we made 0.75%. RH, we made 8.3%. HEI, 2.8, 1.7, 2.1. Tiffany, we got kind of lucky. I think they came out with their earnings about 2 days later and picked up 5 3/4. LGIH, a home builder, picked up 1.3. And I can almost guarantee that during this week, and this was in a sideways market basically. We had last Wednesday we had a 100-point bump, but the rest of the days were pretty much close to sideways. So in a sideways market, not bad. We were 11-1 on our trades. I think you can take that all day long. I also did some with that were upgraded to neutral that had a relative strength over 1.2, and those we were 5-2 on. So again, if you can, most traders consider if they can do 45% winners. Hopefully their winners are going to outperform their losers. That's how they'd still make money. But we did RGC, which also showed up over here. I guess it didn't. We did RGC was 0.5%. We lost 0.5%. We did LNN, made 2.6. CAMP, CAMP, made 4.65. VEEV made 10.5%. Trex was up 1.75, and we had ABTL, which was down 1.5%. So that gives you some more ideas where we've probably picked up a look at 15 or 16 stocks that we found on our screens with Market Edge that I think you can go into. Now, a couple, again, on the plus side, when you go into these momentum and relative strength trading ideas, it doesn't hurt if this thing's really moving, like Win or something down here, this RH. You may want to hold on to it a little bit because you may have yourself pulling out a really strong thing. Show the pointer and finger for Varia and correlate to what you just did. This is a different indicator. Okay, I'll take a look at that. The ones like this that are running, especially these two, I may not want to close those out 1 week later. I may let those run or at least peel off some of the shares. Now, the downside of this, which you'll probably see today a little bit, they always say with momentum stocks, they take the escalator up, they take the elevator down. And that's because these guys that are going in there and trading for these quick pops like this, they're going to come out very, very quickly. When you do see the thing run up and you have a day like this where these things roll over, if they don't bounce back right away, then we're getting out of them, because that means the move may have already come in, and it may be time to get out of there. I don't have the. I'm going to take a look at variance real quickly on the point and figure chart. Let's see. Let's see if I can get this up. Okay, yeah, variance. In fact, that VAR. Let me go back to that. I wish I could pull this thing up for you. This VAR, going back to last October, going back there, you're going to break out of a. I'm not sure how they did this on this. You're going to break out at 93.01, basically. You're going to break out of a quadruple point and figure breakout on that VAR. And I think that thing has potential on the short term to get up to around a 105. So that's going back, over a year. That's going back over a year to where we were traded up at 105 or so. So that is also has a buy on the point and figure chart also. Now, I didn't go into today whether looking at the point and figure early alerts or the point and figure breakouts. That's another place where we can go and look for some of these. And if you get if you have a point and figure early alert that has a relative strength rating of say 1.03 or higher, that would probably be one where I would buy the opening trade also. Okay, I'm going to open this up to some questions right now. It was a lot to cover. This is something that we usually don't do. If you're new to Market Edge, we usually will go over a little bit, maybe some different things of trading. But I've had a lot of questions about just trying to get some quick pops in the market and trying to make some short-term trades where we can go. If the market, with this sell-off, when you've gone 114 days without a 1% move to the downside, it's crazy, as bad as it sounds right now, because you're probably losing a little bit of money. It should give you an opportunity to add some positions. The financials were one of the weakest today. That's because of the U.S. dollar falling back. The 10-year yield actually has fallen from about 2.60 to 2.43. It's almost a quarter point already since we had the FOMC meeting. Another thing I wanted to bring up today is I see a lot of I see the Japan and the European markets outperforming our market here over the last say 2 months. So we look at some of the ETFs. If you go to the ETF Center, you can use this relative strength investing into that. You can go in here, you can find some of the strongest ETFs in some of those markets. Just go to the developed markets and look at that. I know DFJ, which is a Japanese dividend fund, looks good to me. It's one of my portfolios. I have that thing. It's already up, probably about 18-19%, but it still shows up as one of the stronger segments of that. Some of the other markets, EWG is Germany, EWO is Austria. Trying to think of some of the other ones that are in here on the developed side. EWL, Switzerland. And there's another one, FEZ, which we spoke about a week or two ago. That's also a all of Europe type of fund. It's up about 8.7% over the last. We probably had it in there for about several months. But those are some ETFs that you can buy and possibly outperform our market right now. As far as the emerging markets go, some of the ones that are looking good in here is one called DGS. Another one is MXI, which is kind of a materials. DGS is an emerging market small cap dividend fund. It might be one that you could take a look at as far as it's currently outperforming the broader the EEM type of ETF for the emerging markets. So these are some ideas you can also take a look at. I don't see any questions coming in, and I've gone, my usual too long again. But if you have any questions about some of these trading ideas, and this also works to the downside. If you like the short stocks, you can look for some of the stocks that are being downgraded with they're starting to just break below the one, or you look for some of the ones with the weakest with the relative strength on your different screens. Hold on, I think I might have one more here. Do you use ADX on ENZ? Let me take a look at that real quick. Again, as we're getting ready to roll out our new charting package, I'm having a heck of a time, not having our markets. Now, if you look at the DMI on ENZ, you have the green crossed above, and you have the ADX blue signal has gone from about 18 to 26. When you use that ADX, if you can find the ADX line going from like 16 to 18 and hop in around 25, you usually have a pretty good winner. But that ENZ is showing a nice trend higher, and it's under the up-down slope ratio looks good with the slope up. So you do have some you're breaking out here. You just broke out of a year high at 7.5, so you have some. It looks like a nice trade to me. But the ADX DMI thing is confirming that would be a good trade on the ENZ. Okay, I'm going to wrap it up there. If you have any questions, again, just send them to the doc at marketedge.com, and I'll try to answer them personally, or else support at marketedge.com. And maybe just in paper or something. You can do what I did over here. Follow 4 or 5 of these stocks, go back to the sectors and the industries, write a couple of them down, and see how you would do. If you're doing this for the week, you're 11-1. I'm feeling pretty confident that I can, actually it's called, they just do a day or two, it's called scalping. But I'm feeling pretty confident that I can find some pretty good winners, using those screens that we talked about at the early part of this thing. Now, if you go onto the markets page later on in Market Edge, this will be recorded, and you can go over some of these earlier screens that we looked at to find some ideas. As far as maybe looking for them tomorrow, not so sure. I think I want to let the market see if we can balance a day or two. You've had an awful long time where people haven't taken any profits, so maybe they get a little bit nervous here and take a little bit more money off the table. But look for them probably to go back in if we get down to the 50-day moving average, and then you can try out some of these trading ideas. All right, thanks for taking time out of your busy day to join me. I hope you got something out of this, and like I say, hopefully we can make enough money to pay for Market Edge for the next year or so for you. All right, have a good week.